where we're going to look at whether you're trading as a hobbyist or as a business. In other words, what your behavior says or what you intend, perhaps. Some of it is in your control, some of it you might not even thought of, but whatever it is, we're going to unpick that in today's session. Delighted to see you here, as always. Thank you very much for popping in. As always, we'll have a little shimmy around markets and see what's moving and grooving. As we do, please remember this important message. Not only are these views and opinions mine, but what you've got to do is, of course, do your own due diligence on anything you see here. Make sure that you follow trading plans and make sure that you manage risk on every trading action that's on entry and exit, consistent with your trading plan, of course, your trading objectives and personal financial situation. Thank you very much indeed for all those of you who have said hi already. Good evening, Brian. I hope you're good. Hi, Wayne, and good day, Hugh. Thank you very much for popping in today. For those of you watching on YouTube, then please make sure that if you like what I've got to say, you click that little button, that little like, thumbs up, whether you're watching it live or whether you're watching it in replay. I'm just going to flick over my microphone. If you just give me a second. Okay. Now, just to confirm, you can hear me and see the screen okay. That would be great. Good evening, Simon. Good day, all. How's that for you? Okay. Right, okay, let's get things started. Thank you for the heads up on the audio visual stuff. Right, okay, so we'll have a look around markets first of all. Of course, it's a fairly big day today, or theoretically at least, because the Fed are obviously releasing their interest rate decision after their two-day meeting. What that means is dependent on really what the narrative is, because the expectation is that there'll be no rate cuts today. And so the debate will be around what the Fed may do going forward. So the joining statement to press conference is going to be vital in terms of making that judgment. We can have a quick look at the CME Fed Watch tool, and you'll see that really there's no chance at all if we look at right now, unless they surprise the world. You can see there 97% chance. We've got to go all the way to June before we get an over 50% chance of a rate cut. Even in April, you can see there it's only 30%. So markets are pricing in. Markets are pricing in that that June is the next thing, and then of course Trump might not be here by that stage, if Trump has his way, of course. That's not the only thing going on, of course. We've got some big earnings coming across, massive earnings coming across, in fact, today. We've got the real earnings from Microsoft, Meta, and Tesla, indeed, all after the bell. So lots of things for markets to digest. Now, just to have a quick whiz around a couple of other things going on, you can see there the CPI data that came out from Australia today. I talked about that. Much higher than expected. That is interesting because it means that there was already, it was a 50-50% chance that the RBA would meet next week and potentially pause or increase rates. I think that just about locks it in on the back of good jobs data. If we look further on down, for the rest of the day, for the rest of the week, sorry, we've got jobs data out on Friday. We've got PPI month on month out on Friday evening as well. Just watch Europe on Friday as well. I've got some German jobs and GDP data. Those are the major things going on this week. If we look at what's happening in Europe right now, you can see it's all looking a little red after looking pretty green earlier in the session. Let's just check out the futures, actually, the US futures as well. With that change, that's quite a change in terms of what's happened, because of course we hit record highs on the S&P 500. Nasdaq still going really strong on the futures contracts. You can see they had a good session last night. All the Magnificent Seven, apart from Tesla, reported well in anticipation of good earnings, I'm guessing. So really sort of interesting markets going on at the minute. Buying coming into oil. Gold is just going completely mad. And copper is flying as well, back up towards a test of record highs. We'll have a look at charts of those a bit later on. Of course. Thank you very much, Don. Hi, Roger. Good to see you two here as well. Thank you very much for popping in today. A little bit of weakness in Bitcoin as well. Let's go through the session, then we'll have a look at some charts in a little while. So why does the question matter as to whether you are trading as a hobby or a business? Now, the reality is that most traders don't consciously choose how they trade. They sort of follow into it. Most are actually in a bit of a green zone, sorry, a gray zone, where they do some things but not others. But it's all about the structure, behavior, all about structure and behavior and the transition between those. That's the way it works. Behavior may shift unless it's pretty well locked in, depending on comfort and conditions. That's your personal comfort and market condition. And for, again, in this gray zone, obligation to do the right things on a consistent basis, or the I must talk about in a moment, is often selective rather than consistent. I don't think there's anybody that would doubt the merit of evaluating performance, but not only, so people know it's a good idea, but whether they do it or not is, or whether they do it often or not is one thing. And then, of course, the degree to which they do it is really important as well. So it's really this simple. If you selectively do your I must, it creates a selective professionalism. So what you need to do is identify what obligations you honor only sometimes. That's really the bottom line. So it's this concept of obligations I want to focus on. If you're trading as a business, and as with any business, you accept responsibility regardless of what outcomes you're having now, you've had in the past, or you may have in the future. But acknowledge the need to meet certain things, certain responsibilities or obligations, as I've called them. Whereas if you're doing things as a hobby, you can disengage when you want. The consequences, you're quite prepared to see your account go nowhere or fluctuate significantly, and may never move to a place where you're having sustainable profit for quite a long period of time. I'm guessing many of you here have had a couple of steps forward, one back, one forward, two back, and so it repeats. Today, David, good to see you. And really, it all comes down to mindset and attitude, really, determining whether your obligations are seen as being optional or mandatory. I.e., if I want to be a successful trader, are these obligations absolute, or are they things I can take or leave? The problem with this is optional structure eventually breaks. We've seen it time and time again. Look, I've experienced that personally as well in the past. In that, if you don't do the right things consistently, you don't do your I musts, sort of take shortcuts, or don't do things at all because you think you know better than the market, you can feel it potentially, or you think, look, yeah, I don't really need to do that thing that Mike says. So the action point is
you've got to have a look at your process. So by your process, I mean every trading activity you do or attempted to do, and then ask, is this part of my process non-negotiable? To give you a little more clarity about this in terms of what it really means. Generally speaking, if we're looking at the difference, so I'll just skip that forward a little bit. There we go. So if we look at the difference in hobby mode, where you've got low or selective obligation trades or opportunity driven, you've seen, oh, a setup, there we go. And away we go. And rules are interpreted in real time. So, and often maybe sort of adapted to the fact that, oh, that's something that maybe doesn't tick all the boxes in my plan, but it ticks enough of them for me to be okay. Or that price is moving towards my stop loss. I'll tell you what, we'll just move it down again. So you change your rules in real time, and decisions adapt during the trade. Remember, one of the things that I always stress is you should really have pre-planning for every part of the trade before you press the enter button. Now that need not necessarily be, I'm going to do this at this price or that at the other price. What it means is that that's one way of tackling it. The other way of tackling it is to say, if this and this happened, then I'm doing this particular thing. I'm partially closing or exiting. So, and what we do is we get really busy. We'll look at 17 charts when really what we should be focusing on is 3 or 4 that are setting up well. Or we ignore the open trades because let's just sort of leave those for another half an hour. We'll come back to them. They're not doing very well. Let's just have a look at some other stuff. And so the if you like, the underlying thing is that if I'm busy, then I'm productive. Busy doesn't necessarily mean clarity. So that flexibility in looking at a gazillion things at once might feel skilled, as though, aren't I a good trader because I can juggle all of these things at the same time, but often reduces consistency, which is the danger, of course. Because once you reduce consistency, then you're moving away from what one of the key foundation stones of trading. In business mode, it's almost enforced obligation. So trades are gated both on entry and exit by predefined conditions, as I said. And those decisions are constrained before entry. So let's take an obvious one, lot size. So you know, if I'm going to enter this trade, before you enter it, I'm entering this amount and I'm entering this amount because because I know that it manages risk according to my personal risk tolerance and plan. I'm going to place my stop loss here. I might have a take profit, but I'll certainly have an exit strategy which defines when and where I'm going to get out. And one of the real differences, and I've sort of referenced this a couple of sessions ago when I talked about sometimes no action is good action. So inactivity is planned and acceptable. So you don't do anything unless it's part of your system. When we do a review, it focuses on decision quality as well as the results. So was it the right decision that I made? So it was one of the reasons why I've got this. That's why I developed this. Let's just see if we can quickly find it. Yeah, it's one of the reasons I developed this override logger, which says if you override your plan or your EA, then you log the reason why, and then you can do some analysis after it, puts it in a CSV file, does some analysis after it. Otherwise, it just looks like another EL. And therefore, you won't know the quality of your decision. So it's, and by quality of decision, obviously you need some good key metrics, not just profit loss, to give you the basis behind your decision and how that was working for you or otherwise. So bottom line is, with a business mode, consistency in mindset enables repeatability. Repeatability equals consistency. Consistency equals the ability to go back and review, plan with confidence that you're actually reviewing what you actually mean to. If you don't follow your plan at all, then you can't make a judgment on your system, really, essentially. So what do we mean obligation? So what I've done is, anybody wants this, they can drop me an email and I'll flick them the image. But we've got what I've done is I've split this into obligation areas. So if we take decision obligations, so trades are only taken and when the predefined conditions are met. When we talk about invalidation points, it means when your entry is no longer valid. Skip trades are intentional and logged, and of course exits, exactly the same rules apply. And if you do that, then trading, sorry, if you don't do that, then trade becomes opportunity driven and reactive rather than proactive and lacks the consistency. So risk stewardship, capital treated as a work in inventory. You always define maximum risk before participation, make sure that's followed, and drawdowns are managed operationally. So you've got various rules in there that may limit drawdowns on your account as a whole, not just within single trade, but you might have maximum trades open at any one time, maximum exposure to particular asset class or sector if you're trading shares. From a process, execution rules are followed even when outcomes feel obvious. So even if you know that you're going to take a loss, you follow your rule. And as I said before, consistency is prioritized over activity or intensity. Our review is, I'm going to talk a little bit more about this. Our focus is on decisions, not outcomes, and we have a schedule and a thoroughness in how we review. If you don't do that, then you're not going to get the detail that you need to correct mistakes, refine systems, all of that sort of stuff. With your development, which is important, a lot of people shortcut the learning. If you shortcut your learning, you're likely to get results that are shortcutted as well. So you should be making time for skill development, system development. Improvements are tested, not improvised. So things like checklists, you'll know that I've done a competency list, both for the discretionary side and an EA side, many of you. That's designed to give you a framework. So again, what we're trying to do is make sure all the boxes are ticked. Whenever we sort of jump into a new program, there's often, in the excitement of learning some new stuff, we'll often go to the, how do I get it going now? How do I trade this now? How do I put this indicator on now? Not making sure you've got all the boxes ticked. So again, things like checklists or competency lists, and those who are familiar with AI can develop these at will, providing you've obviously got the prompting skills, which again, some of you have worked with me about that. With a business obligation is to operate within constraints. So for example, let me give you an example. So maybe if you're trading shorter time frames or the trading is actually quite intense, you'd walk away every 20 minutes for 5 minutes, perhaps, just to sort of reset, breathe, get away, so you don't get sucked into what's happening in the market. So and invariably you may put things like, I'm only going to trade between this time and this time. When I'm distraction free, it's often pre-planned. A lot of people develop a time management plan for their trading, which is not a bad idea. But that incorporates not just your trading time, but also those other things that we've already talked about, like system development and learning and things like that. If you don't do that, then you're going to get potential decision fatigue. You're going to get sucked into what markets are happening right now, into the market noise. And you're looking to, in that situation, then essentially your tendency to move away from what you intend to do, perhaps at the start of a trading session, will be limited. Accountability. You take responsibility. It's never the market's fault. You're making the choices at every stage you're in a trade. And that's also a choice to take a loss because this trade isn't fulfilling the idea that I had initially. So irrespective of what's happening with market conditions, irrespective of what's happened to a specific trade, every decision that you make is a choice. And if you choose to not check in with when economic data is due, then is that the market's fault? Is it the market's fault that CPI was strong this morning in Australia? Or is it more so that that CPI number could be anything, and you have a responsibility in terms of the trades that are open to manage that risk accordingly. So where you place the blame for whatever your results, or the credit for whatever results you get, is really important. If you're doing well, it means you've worked hard in your system and you're learning. But ultimately, it's and the refinements of such based on performance evaluation. So what gets the credit, if you like, is your discipline, your consistency, your meeting obligations to make sure that the right things happen on a consistent basis. So the credit is still with you, but with someone who's operating mostly in a hobby zone. It's aren't I a clever trader? And then go down the pub. And I caught something that was this big sort of vibe. Not relaying the fact that they'd lost 17 trades out of 20 prior to that. So if you find this, listening to what your internal voice is telling you during and after trade, it's a good clue in terms of what could be going on. Just time, intent, and engagement, just to reinforce, hobby mode emerges during unstructured screen time. So if you think, oh, let's just see what the markets are doing now and slap on a few trades without any pre-preparation, without doing, with a little bit of minimalization bias thrown in because you haven't checked out what's happening with economic data, with what the market has done so far during the session, etc. Whereas business mode aligns trading with defined sessions or events which are specifically adjusted to fit whatever else is going on in your world, and potentially the use of automation, either part automation where you're using entry or exit EAs, and of course full EAs as well. Intent determines whether the markets are obvious or observed or acted on. And so when we talk about intent, is it planned intent or is it unplanned intent? The reality is that unstructured time increases impulsive decisions, so we need to move away from that, and we need to move into a place where we are more in control of our trading time, not about trading to the controllers. It's that choice thing again. Choice equals control. And if you're in control, even if you don't like what's going on, then you're in a far, far better decision-making place. And talking about decision-making, you will find out if markets are flying all over the place. You will find out pretty quickly what sort of trader you are, or where, how grey that area is, or whether you're moving, you're primarily in, if you split it into two, or a continuation or a continuum line. Then if you're in the bottom half towards hobby, then you'll find this out particularly when markets are at their scariest. So an increase in volatility often exposes your true operating approach, or how established or fragile that is. Because without those obligations, without that structure, without that discipline, without all of the things that you've done to date to do the pre-planning and pre-preparation for you as a trader, and including, of course, when you're going to trade, then the rules will loosen under that stress. With obligation, you get that execution happening when it should, and when it shouldn't, you get disengagement. So you're not trying to jump onto the next trade that's running hard. When you're already in 3 yen crosses, you're not jumping onto the next one. Commitment doesn't necessarily relate to intensity. So to be committed means that you're working on all of those obligations that I talked about before. Being busy isn't what it's about. Being smart, being committed is what it's about. And that's what, look, intellectually, it doesn't matter. Some of the worst traders, I think Einstein did trading before there was obviously online stuff. But sometimes the smartest people, from an academic point of view, make rotten traders for the simple reason that they think they know better than the market. So intellect isn't necessarily the determinant as to what sort of trader you can become. It might make it easier to explore some things earlier, but simply because of the experiences you've had. If you've had experiences in tech, you may feel more inclined to have a look at EAs with perhaps someone who's less confident. But that's experience rather than intellect. The wisest thing of all, the smartest thing of all from an intellectual point of view is to make sure that you're appropriately committed. Again, it goes back to that, am I committed to putting my energy, efforts, which is finite, into the right things, or am I just going to be busy as a trader? Or charts to look at, surely that means I'm going to become a good trader. The longer I've been trading, surely that means I'm going to be a good trader, irrespective of the fact that you haven't changed anything in all of the years that you've traded. Years in experience is not it's not a determinant of whether you're successful or otherwise. So the key idea is here: the pressure reveals the real structure. Now, again, we're on a continuum. It does take. I'll maybe do a session at some stage about management of a black swan event, because it will happen, and it hurts, and it can often create a little bit of damage. But there's things you can do before, which we're sort of talking about here. But there's things you do afterwards to make sure the next time you're in a better place, and that you've got more structure there, and that you've done some personal and some system evaluation to see how well things held up, and made a plan to fill some gaps to move closer to where you should be moving to. I want to talk a little bit about risk framing, because the sequence matters. Now, both reward and risk are important, but a hobby mode always will consider risk first. Look at this. Look at what I could win here. And often, because of the excitement of doing that, because that's your start point, then invariably you miss things. I think I talked on another session when I talked about market structure. If we look, for example, let's look at something anyway. Look at the NASDAQ hourly chart. You can see there, look, there's record highs. Mental. Anyway, I'll show you mental in a minute. Actually, let's look at gold. Let's just look at it. There we go. It's mental. 5,278. Okay. Since in a month, gold has moved up 18%. I did suggest gold might be a good place to be in about July or August, hey? And again in November, the next bar, which is returning. Keep an eye for that. In a business model, what we do is we identify where the risks are, not only in terms of risk of, in terms of capital risk, in terms of, well, look, this trade, I recognize this trading idea might not work. If it doesn't work, then where am I going to cut it? Where is the evidence, or what is the evidence going to be that this is a trade idea that just didn't happen? An example would be a breakout of resistance, then it pops back in, and of course, that then is a clear indication that your trade idea didn't work. It doesn't mean you wait until if it goes back into a range, till you wait until it's gone all the way to the bottom of the range before you can tell that trading idea hasn't worked at all. So not only is it a start point of identification of risk, it's an identification of how much, because that's important in terms of lot sizing. But it's also, you should start to, of course, think about reward as the second thing, but start to think in a risk terms of, well, where is this likely to stop? I mean, that logically could be part of your decision making to go in. Is there enough in this trade to make it worthwhile in terms of the risk profile that I'll be taking? Some traders would say I'm not taking less than a 2-to-1 win to loss potential on this. You've got to define your own boundaries with that. Again, going back to constraints as to what's acceptable and what's not acceptable. If you said I need a minimum of 2-to-1, you don't get in if there's only 1.5 times risk to the upside, if that's your rule. But as well as that, as well as sort of saying, well, how far might this go? What's the proximity of the next key level? It's where could the pause points be? And a good clue on that, of course, is where they were previously. If we just look back at gold, it's very difficult to see this on gold. But if we look back at a half an hour chart, so you can see the pullback there. Where could this? So if we'd have got in here, you wouldn't trade this short. Well, you might, but what you would do is say, right, okay, if it breaches this level, temporary support for around about 2 or 3 hours early in the session, there could be a short move to the downside. If that happens, it could go all the way down to here. Hang on a minute, there could be a pause point at here in this retracement here. Okay, so potential short entry here, potential pause point here, potential take profit there. Way against the trend. So I'm not suggesting that might be a good setup. I'm just using this as an illustration. And then, of course, you could say, right, well, if it breaches that, then a logical stop would be here. So that's your logical stop placed. But now we're sort of saying, well, look, that's our potential profit target because we've pause point here on the way up. It might be a pause point on the way down or even a reversal point. So what we'll do is if it hits this stage, we might take this stop that's here and we might lock some of it in by putting it sort of here somewhere. So again, what you're doing is not only predefining capital risk, but you're predefining profit risk management as well. Does that make sense? So risk framing shapes exits more than entries for sure, but that doesn't mean that your exit risk management shouldn't be part of your entry decision making. But that obligation of trading as a business means that really you should be starting there. And when I was talking to some people about I forget which EA course it was on. But I was talking about some of the next level stuff. If we wanted to move to institutional level automation, then it does involve this. Institutions think about risk management from the get-go. That's their major, that's one of their major narratives with or underpinning principles behind anything that they do. So where are if I'm going to trade like this, where are the risks that I have to mitigate for? So risk first, reward second. Both are important, however. I talked a bit about performance review earlier, and of course, I think gold will hit 6,000 this year. We can talk about that. We'll talk about that at the end. I'll just do a quick review of gold. My thoughts on that. Hobby reviews are outcome focused, so i.e. profit loss and emotional and shallow. Business reviews are scheduled, sample-based, and thorough. So they look at not only, as I said before, the metrics, metrics outside of just simple profit loss, but we look at some of the other key metrics such as drawdown, average win, average loss, win rates, maybe Sharpe ratios if you choose to, and would also look at, as I said before, the decision quality, particularly those trades which either you hadn't taken at all, that you talked yourself out of because you felt that your original idea may be becoming invalidated, but also, which is one of the tools we're going to develop in the hybrid trading as one of the next things, but also that concept of recording when you override what's in a plan or an EA. So you're looking at all of those things with business reviews to give you the correct out of information to subsequently go back, close the circle, and put in the refinement sheet that you need. So that key factor is the inactivity and the decisions that created that inactivity is reviewed alongside trades. Behavior, whether it's good or bad, without review often repeats. So if you're doing something wrong on a consistent basis, even if it's something small, often the devil's in the details of trading, and it can be just a small thing that's really putting holes in your potential profit. And as I said before, experience in time alone doesn't create improvement. It's what you do with that time that you've been trading for that makes the difference. So when we're looking at performance review as a whole, the key idea is the quality of feedback obtained is more likely to result in a better quality of refinements. that's more, or in other words, more likely to take you towards some of those trading objectives that you set for yourself. So look, I'm not saying this transition is easy. It's why most of us at some stage spend some time in the grey area at various points along that continuum. Some of that is difficult, obligation, or I must removes optionality. So possibly your creative side of things. But you can channel that creativity into some good activities, such as new system development or smarter ways or quicker ways to put things in place to enable you to get to the stage where you've got a system you can touch, get to the stage where you can evaluate performance at a click of a button, get to the stage where you're testing out with some certainty about different ways to exit from a trial point of view. So you can still exercise creativity, but never mind feeling the market. Let's just do the market on a consistent basis. So that optionality feels like skill. Look at me, I'm a great trader. I can look at any chart and I can tell you when to get in, and then I'll do it anyway because I'm in control. And I'm a maverick, and isn't that cool? All things I've said about myself in the past. Yes, you may have the freedom, but it's not, you've always got the freedom. Choice is always there. So you've always got the freedom to do or not to do. And that goes from learning the thing that you've got to learn, to developing the system that you should be developing, to measure what you should be measuring, and to trade it as you should trade. But that optionality is less likely to create sustainability results. That's the reality. So optionality feels good. One of the reasons why it's difficult. You feel as though maybe some of your control has been taken away because you're reliant on something else. But the control and the choices are still there. It just means you're channeling them into something which potentially is more objective. Part of the problem also is that you can have a great run. So look at what I could have won. I'll tell you what, the next time I'm not going to put a profit target in place. I'm just going to let it run. That's what that old market cliche. I heard Mike on a webinar saying, let your profits run and keep your losses short. Cut your losses short, sorry. And that's fine. But there's ways of letting your profits run. And there's ways of knowing when it's time to get out. Well, let's say you remove a take profit that's logically placed at a previous key level, for example. And you say, no, look, it just smashed through that and then it went on. Look at that gold chart. Look at what I could have won. Well, that's all well and good. But what it does is it creates the potential for next time there's a take profit, you might not take it. And it's really easy. It's really easy. Because this is what happens. Oh, look at this, isn't this exciting? And then this happens. Oh, look at this, isn't that short opportunity exciting? And then this happens. And that's just on Bitcoin, which will do very well as well. Interesting. Come back and have a look at Bitcoin. Does that sort of make sense? So you can, even with bad habits, have a run that's okay. It fosters belief that you don't have to do what Mike says. It fosters belief that you don't have to put that performance evaluation thing in. It means that you don't have to log your hands when you move away from your system. But it's all about your choice. To do or not to do, or to work or not to work. Are you a lazy trader? You're a committed trader. Only you know that. Look into that honesty trading mirror. So if we're looking at the resistance to moving forward, it's structural, not intellectual. As I said before, it's nothing to do with whether you've got a PhD or not as to whether you're a successful trader. It's got to do whether you can remove the blocks doing the things that you can do, that are in the grasp of every single person that's on this webinar. There's a sort of trading that's right for you. There is a challenge in finding the right style. in finding the right thing that fits within your lifestyle, the sort of risk you take on. But none of that's rocket science. And the only gauge you should be interested in is, am I moving forward? Not how am I comparing to other people? Because invariably when you listen to other people, they're probably not doing quite as well as they say they are. So I want you to have a quick look at this list. As I said, I'm more than happy to create a little image and send it through and all that sort of stuff. It's going to be my next product, Simon. The trading honesty mirror. But you can have a look in Kmart. You can have a look in Kmart. But really, this is your, if you like, this is your checklist. Do you really do this? I would say a really good thing is to look at a list like this and give yourself a percentage score. Then work out what it is that you're within that, why you're losing 30% or 20% or 70%. And gather evidence for change. So look at the trades that you did. If you're looking at how well you follow systems, look at the trades you did follow a system and what happened. If you've got something in your mind that keeps on being the reason why you get out, it's actually good, it becomes part of your system. It's one of the reasons why it's great to manage that. So only you can tell where you are on these. I did think of doing a little series and doing checklists for each of these, but that's something you can possibly do for yourself. So we'll do some actions and then we'll have a quick look around at some charts. So review the material covered today. As I said, I'm more than happy to send that through mike.smith@gomarkets.com. And make a choice as to about where you sit on either side of the spectrum for each of those things and as a whole. What's next for you? What's going to make the difference? Which of those are you going to tighten up on? What I may is going to become an I must. That's a good way of expressing it. Does that make sense? Quick look around the markets. If ever you want a recording, just ping me and I'll send the link through to you. We've also had a quick look at Bitcoin, a quick look at the index as a whole. Here's the US dollar. Just on the monthly chart, you can see how dreadful the US dollar is looking. If we look at a 4-hour chart, you can see the last 48 hours has been particularly brutal, but more than that now. Why has it been brutal? Well, we've got Trump, and I think the market, the US dollar, is just getting ultra sick of listening to Trump bang on. It's decreasing confidence in the dollar internationally. On top of that, the Japanese, it's reported, if I've read this correctly, the Japanese are reporting that they're going to sell some of their US treasuries, turn them into yen denominated assets, which sort of fits with the sort of unwinding of a carry trade, but that is all sending the US dollar to, as I said, lows not seen for a long time. So we're back through levels from 2021, which is one of the reasons why gold is doing so well, obviously, despite that brief pullback. As for other metals, copper is the one to watch. It's trading mid-range at the moment. Just dropped off a little bit. Looked as though we're going to sort of move through the 608 on the CFD contract on Go Market is the one to do. Trump is doing a magnificent job, of course, Simon. Yeah, blowing it. The US dollar is good for US imports. Exports, sorry. Imports are under pressure because of people have all gone and found other relationships. Here's USO, which is sort of interesting with the US, because the USO USD is priced in USD. Then that's moved up to its 200 moving average. Remember how one of Trump's only, he closed the borders. That's fine. No one put it on the drama. That's what happened next, and killing 37-year-old nurses isn't on the plan. Although I do hear he has pulled back on that. There's a review going on, which is good. It's about time. That's not building confidence in the US. And there's quite a rhetoric around the world about what's happening. If we look at oil is now testing 3-month highs, 3-month intraday highs. So we're already, from the lows we hit mid-December, we're already around about 12% higher. So that may create an interesting dynamic in the US. Looking at some of the crosses, let's look at Euro USD. There's that blast through that we had yesterday and the day before, really sort of accelerated yesterday, just a bit of a pullback. This could be profit taken prior to that Fed decision later. You can see it's come down to a reasonably interesting key level at that point there. I'm just trying to, what was the trade? GB pound Aussie yesterday. Let's have a look at, there's the daily chart on Euro USD. Again, you can see that strength of the Aussie dollar over the last few days. Could well come down, test this support on at 170.50. At this stage, it is looking as though it might. There's a short-term support kicking around here, around about 171. Nice solid psychological level. Now. GB pound Aussie, I wanted to put up because this was our chart yesterday that we had a look at. So when we did a chart of the day, trading within this range, and we said either side of this range looks interesting. And then it reached that range and moved down to this one, as it often does. Now we've breached that as well, and we're moving down with that Aussie strength back to about that CPI to this level at 196.83. Probably too late to get into a short trade right now. There's a crossroads, could go either way. Again, daily context is important here. And you can see there, this is the strongest the Aussie's been against the GB pound since all the way back here in February last year, 12-month lows on this cross. We did see a little pullback in REMX, which has been one of my favourite picks really since it broke 75, got all the way up to 100. Which is the ETFs. ETFs not a bad place to be because of course it's earnings season in the US. Let's look at a couple of Australian charts through the scanner. Always good to make life a bit easier. There we go. Strong day again for gold, not surprisingly for gold. Outside of gold stocks, uranium stocks are still looking great. I just need to close down a few charts here. Just give me a second. All the back testing engine beforehand. They're all the charts have got open. The joys of VAs. I'm not sure this is a trading as a business activity, is it? Leaving all these charts open. Right, let's have another try. Should open a chart for us now. So where were we? Paladin. Uranium stocks looking really good. There's Paladin. Again, I talked about this yesterday for those of you who were on our session and right yesterday. There we go. That's the level it paused at. If we look at a chart, look at the weekly chart, then this 1396 looks like it's closed today. $14 might take us up towards 16 or 15.20 or so. So uranium stock's still looking really, really strong. We are in overbought territory, just FYI. Other metals, let's have a look at OIC from a rare earths point of view. Just that pullback, but a positive day today. So we're watching now for maybe this level here to the upside and possibly a challenge of this level here to the downside. So mid-range at the moment, but there's two nice key levels there. One at 17.16 and one at 15.20. Could go either way, but at this stage it's looking as more likely as though it may move to the top rather than the bottom. We'll see what tomorrow brings. If we're wanting something that looks a bit tricky, GEM, education company. This has dropped fallen from grace. Again, the sky just picks it up in a heartbeat. But there's the key level to look at, keep an eye on with GEM, which is what, 65. A breach of that. I'm not sure whether you can short GEM. I think you can do. But check on that first. You can always find that out in specifications. And Whitehaven Coal, another one we talked about. And Rio, again, some of you have seen this. There's Rio. Dancing on the sand. Really important level on Rio. It's the third attempt at this key level around about 156. So that's something to keep in your radar tomorrow. Okay, ladies and gentlemen, thank you very much. Whether you're watching this live, whether you're watching it on YouTube now, whether you're watching it on YouTube later, thank you very much for popping in. It's been a pleasure and a privilege to serve as always. And as I said, if you want recording, you want maybe an image of that obligations thing just to have a look at, then drop me an email. Otherwise, there will be a lunchtime session, really good tomorrow. Really good attendance at the last one, so thank you for that. Just in case you want to rock up. Let me just give you the link, just in case you're not registered. I think you probably are. But if you're not, I've now just put the link into chat. That'll be 12:30 kickoff-ish Melbourne time. So there you go. So cheers, thanks David, cheers. You have a great evening too, Shane. Thank you very much, Wayne. Simon's going to Kmart, fantastic, mate. Yeah. It's interesting. You can spend some money on a trading honesty mirror. It'll cost you a few bucks. Prize for the one who develops who gets a mirror and develops it into a trading honesty mirror with the appropriate decoration. It'll cost you a lot more if you don't buy it. Anyway, I'm going to love and leave you. Thank you very much to everybody. Don't forget to take some action on the back of this session. That's what it's all about. If in the meantime you'll write 3 things you've learned or gained from being here, or even 2 actions you might take, then that'll be a really worthwhile thing for you to do. Take care of yourself. Enjoy the rest of your evening. Thank you so much, as always. Bye-bye for now.